Investing in the stocks versus investing in the multifamily real estate, which one's better? I will let you decide. In today's video, I'm going to be breaking down the pros, the cons, the risks, and everything you need to know about when making that decision. And make sure you stay with me throughout the entire video. I'll be revealing where the wealthiest families and the largest institutions and companies have been secretly investing their money for the last 20 to 30 years, and you won't guess where. So jumping right into it, the pros of the stocks versus multifamily. So starting out with the stock market, it's very simple and easy to get started, meaning there's a low barrier of entry. Meaning I can pull out my phone right now and I can pull up my app and I can buy a stock. I can buy Netflix or AT&T for $5 and there you go. I own stocks. Very, very easy to get started. Number two, you're investing into the largest companies that exist. These companies employ thousands of people. There's a ton of organization and structure that goes into it that can generate predictable revenues and predictable returns for their shareholders. You're not just going and investing into some mom and pop coffee shop right up the street where you have a massive amount of risk because it's a small company. These companies are publicly traded. They're regulated by regulators that make them follow a certain set of rules for both the operations and the accounting. So there's a sense of safety because you're investing into these larger assets. Third one being over the last 50 years, since the early 70s, since the stock market was created, the average annual return over a long period of time is between 7 to 10% per year. And so if you're not an active investor, you're just trying to earn money and put it away for the future, you can know that without even looking at it, you just set it and forget it. For 30 years from now, you should be able to have an average annual return of 7 to 10% per year. And then the last one being you can buy and you can sell at any single second. You're considered liquid, meaning I can pull up my phone, I can buy $1,000 of AT&T stock today, right this second, and then if I randomly decide to sell it 5 minutes later, say I need some more money, I can go into the portfolio, I can press sell, and then based on the value that it is at that point, I get that money back. So those are the pros of investing into the stock market. Easy to get into, fairly predictable returns over a long period of time, and very easy to get out of. Now moving into the pros of investing into multifamily real estate, the biggest one that most people love to hear about is cash flow. These buildings have tenants that work every single day, they make money, and then rents are due on the first every single month, and it's very predictable, stable, and consistent cash flow. Second one is tax advantages. These are huge. For us personally, we pay very little in federal income tax, and you can hate on them as much as you want, but Donald Trump pays very little in tax because he follows the tax code that's set for investing in the buildings like this. So don't hate the player, hate the game, or just learn the rules and start playing yourself. The third one, which is where almost all the money is made in this business, is the forced appreciation. Because of the way that these assets are valued based on income and not emotion, we'll get into that later. They're based purely on the income that this asset produces. You can predictably force the appreciation at these properties through renovations or better management. So you have a lot more control of your returns, and that leads me into the next one, which is the number one reason why people invest in the multifamily. You have generally much better returns than you're going to get investing into the stock market. Historically, you're close or around a 15% annual return. Some years you could be better and hit 20 to 25 to even 30% annual returns, or you could have worse years where you're hitting 10 to 12 to 13% returns. So I average it out at about 15% annual returns. And this is between both the cash flow that you're receiving on a monthly basis and the appreciation that you get to take advantage of whenever the building sells. Last one I threw on here is leverage or using debt. Now, this is a double-edged sword. It's actually in both columns, pros and cons for real estate. Because in real estate, for example, let's say I took a $100,000 investment and I went and bought $100,000 worth of stock. I just own $100,000 worth of stock. In real estate, I can take the same $100,000 and I can go out and buy 3 to 4 times as much real estate as I do actual dollars, meaning 100 buys me $300,000 to $400,000 of real estate. And that way you can get into bigger assets and you can force the appreciation there. And the value of the building only has to go up 25% for you to be able to double your money, opposed to the stock that you own. If you invested 100 grand and you wanted it to grow to 200 grand, that stock would have to grow 100% in value in order for you to hit that. So that is why investing in real estate has been so attractive for a lot of investors. Now that we've covered the pros, let's go ahead and jump into the cons. Hey, real quick, if you're enjoying this and you're looking to take action and close on your first or next multifamily deal, make sure you check out the links down below in the description to join our community called the Deal Room. You'll get access to weekly calls, a network of over 500 investors that are looking to partner with you, and a ton of additional training and tools and resources to take action and start closing deals. Links down below in the description, and let's jump back in. We'll start out on the stock market. The number one thing and why I don't personally invest in the stocks is the volatility. Again, real estate is very simple, very kind of boring in a way, but it's very stable and consistent returns month over month. And then in the stock market, you are all over the place. It is the emotional roller coaster that not many people want to actually take the ride on. You could be up 10% and then down 20% and then up 30% and you feel really good. And then the next week you're back down. So it's just an endless roller coaster of constantly checking your portfolio. I like to sleep really good at night and know that my money is working very hard for me in a consistent returning asset. Second one is that you don't have control just because you are a shareholder. If I went and I bought $1,000 worth of AT&T stock, I cannot call up the CEO of AT&T and say, hey, I think you should make these changes, fire this person, do this. You have no control. You have no say over what actually happens at the company that you're investing in. And you have to hope that those people that are running the operations are operating out of shareholder first and then them second mentality. In real estate, you have a lot more control opposed to this. Third con is you're investing into a piece of paper. You get a digital share that says you own this much of stock of this company. If it goes up, then great, you make that much money. If it goes down, you lose the money. But in reality, it's kind of like the Fugazi kind of thing from like Wolf of Wall Street. It is a piece of paper. It is not a tangible asset like a piece of real estate in a building with a physical address where you can go and see it, touch it, feel it, smell it, bricks and sticks and all the fun stuff. Last con is the emotional valuation. Now, yes, there's the emotional roller coaster of going up and down, but when I say emotional valuation, real estate is based on income and interest rates. That's it. In the stock market, you could have a CEO have an affair with somebody else, cheat on his wife. That comes out on a newspaper article. Investors think that the company is going to tank because of that. They no longer have the CEO. That company could go down 20 to 30% in value overnight because of something that is a very emotional driver that happened. So that's what causes the emotional roller coaster to happen. There is no basis. The company itself could have great financials, making a ton more profit this year than last year, but for some reason the stock goes down 20%. It doesn't make sense, and it's based on emotion. Now moving into the cons of multifamily, of course I am biased. We personally own $65 million worth of deals and over 400 units. Of course I'm going to be a little bit biased on this, but every investment has risk and every investment carries both pros and cons. You need to know them. So con number one is it is illiquid, meaning when you buy a piece of real estate, you put a down payment down. You're not getting that down payment back until you either refinance it or you sell it. Now in the middle, you have tax advantages and you have the monthly cash flow paying you. So it's like, okay, cool. You're not able to pull up your phone, press buy and sell whenever you want. So you have to be willing to exchange being illiquid opposed to being in the stock market in order to get the better returns. Now, second con, which I think we can get over very easily, is generally it is a capital intensive business, meaning you just need more money. Now, this doesn't mean you need more money. It means that you need access to investors, but these projects have capital improvement, meaning you're renovating kitchens, bathrooms, roofs, exteriors, and that stuff costs money. It's not as simple as just buying a stock and letting it ride. There's generally a higher barrier of entry to get into the business, which again, in my opinion, is a good good thing because you have less competition. And then last one, you saw it as a pro, it is a double-edged sword, which is leverage, or taking on debt to go out and buy buildings. For example, we're in 2025 going into 2026. The people that bought in 2021 at the height of the market when interest rates were at an all-time low and values were at an all-time high, those people are in massive trouble because they took on too much debt. The value of the building is maybe 70 to 80% of what they actually paid for it back 3 or 5 years ago, and they can barely pay off the loan on a refi or a sale. And so these people are in trouble. But again, it's just like anything. It's like the person that takes advantage of it and goes out and gets a 100% loan on a property is over leveraging. But the person that goes out and puts a 50% loan on it, that is a moderate amount of risk. Most cases, a very low risk investment. So you're able to get better returns because you use the leverage, but you have to be cautious of how much leverage and what type of debt that you actually place on these deals. So now that we covered both the pros and the cons of stocks and multifamily, you let me know down below which investor are you. And at the end of the day, that's really what it comes down to. I have personally never bought a stock. I personally plan on not buying stocks until we get super rich from multifamily. Then we can go start having fun and just playing around with stuff. And then on the flip side of it, I know that there's people out there that are so scared of putting their money into an illiquid investment that they're like, I'm never going to do it. I need to be able to buy and sell whenever I want. And I don't care about all the extra benefits because I feel safer being in more control over here. So at the end of the day, there's no right or wrong. It's just where do you fit in based on what you're looking for out of your investment portfolio. Do you want to go to sleep at night knowing that the money is in an actual tangible asset? You have a little bit more control over it, but you can't buy and sell it? Or do you want to be in a piece of paper? It's not tangible. You have no control over what happens and it's emotionally driven from a value standpoint, but you feel better because you can buy and sell. It's up to you. I mentioned it at the very beginning of the video. Where are the wealthiest players and the companies in the entire country placing their money? They obviously do a lot of investing, but if you actually look at the data, like I'll throw up a screen recording of a website called nmhc.org. It's National Multifamily Housing Council.org. If you want to go fact check it, the top 50 owners across the entire country. These are the largest institutions, banks, pension funds, and wealthiest investors in America that are families, like hundreds and hundreds and hundreds of millions, if not billions of dollars. Oftentimes, they put their money into multifamily or commercial real estate assets that are considered the private sector opposed to the public market because of the returns and because of the consistency in cash flows and tax advantages. It just makes a lot more sense. So on this list, you're going to see JP Morgan, you're going to see Chase, you'll see Goldman Sachs, you'll see Blackstone, BlackRock, all of the biggest companies that exist. These people own hundreds of thousands of units because it's such a consistent and relatively lower risk asset that they can be in. In my personal opinion, what we've actually done, is we follow the money. These people are going out and buying billions of dollars worth of portfolios of apartment buildings, and we're just like the little guy that follows along. There's a great saying, any company that's going to go into a market and try to make billions of dollars of profits, there's generally little crumbs left over for the small guys like us, and those crumbs are to the tune of $1 million to $5 million to even $10 million that you can make on these properties just by following the money. So that's why we've personally decided to invest in the multifamily first, build our wealth here. Once we've created the generational wealth, then I'm sure we'll have a bunch of fun and go explore other assets. And so hopefully you found value throughout today's video. If you did, all we ask in exchange is make sure you drop a like. I want to hear back from you down below. Which investor are you? Are you multifamily? Are you stocks? Maybe explain why. And most importantly, make sure you hit the subscribe button so you don't miss any of our new content that we're pumping out. And as always, I will see you in the next one.